Did you ever feel this situation and you said to yourself, I've filed my taxes every year, I followed the rules, so how? How could there possibly be something I missed? Maybe you're retired, maybe you worked overseas years ago, maybe you still have a small bank account in another country, money you barely think about anymore, and then one day you hear someone say, hey, you have to report that, and your first reaction is disbelief. Report what? Why? To whom? And what happens if you didn't know? For many seniors, this is not a hypothetical situation. It is something they discover late, sometimes very late. And that is why we need to talk about this calmly, clearly, and without fear. Before we begin, my name is Judith, and this video is for educational purposes only. I'm not a lawyer, and laws can vary by state and individual situation. My goal is to help you understand financial situations calmly so you can make informed decisions. Please stay with me until the end because I will give you a clear checklist of what to do and what to look out for, and I will also direct you to important institutions that can help you if something feels unclear. And if this information is helpful, please take a moment to like this video and subscribe to my channel so I can continue providing information most seniors are coping with but rarely get explained clearly. Now let's talk honestly about what is real and what is not. There is a lot of noise online right now. Many videos talk about new rules or secret changes, and that creates fear. But here is what is real and accurate today. FBR rules already exist. This is called FinCEN Form 114, and it applies when the combined total of foreign financial accounts exceeds $10,000 at any point during the year, not per account, combined. Form 8938 reporting rules also already exist. These apply at higher thresholds depending on filing status and residency, and they are not the drastically lowered thresholds sometimes claimed in other videos. The United States taxes worldwide income for residents and citizens. That means income earned abroad, pensions from other countries, or certain foreign financial assets may still need to be reported. What many seniors do not realize is that this rule applies even if the money never enters the United States. A pension deposited in a foreign bank, rental income from property overseas, or interest earned in a small savings account can still fall under U.S. reporting requirements. Another important point is that reporting and taxation are not always the same thing. In many cases, tax treaties or foreign tax credits prevent you from being taxed twice on the same income. But even when no additional tax is owed, the reporting requirement often still exists. This distinction is where confusion happens. Many people assume that if they already paid tax abroad, nothing needs to be reported in the U.S. But that is not always correct. This is especially relevant for seniors who worked abroad earlier in life, receive foreign pensions, or maintain small accounts to support family. Situations that feel routine or harmless can still trigger reporting obligations simply because of how U.S. tax law is structured. Penalties for non-filing can be severe in some cases, even when the failure was not intentional, although there are procedures to correct honest mistakes. And finally, IRS and FinCEN data sharing and compliance enforcement have increased gradually over many years. This is not a sudden change. It has been building quietly. Now let's slow this down and make it real. Imagine a retired couple in Florida. They lived in Germany years ago. They still have a small savings account there, maybe $15,000, money they kept for travel or emergencies. They never touched it. They assumed it was irrelevant, and for years, nothing happened. Until a tax preparer asked one simple question: do you have any foreign accounts? That is when the confusion begins for many people, because reporting rules are not based on whether the account is active, or whether it produces income, or whether you intended to hide anything. They are based on thresholds and ownership, and this is where many seniors feel overwhelmed. Not because they did something wrong, but because no one ever explained the rules clearly. Let me explain how these reporting requirements actually work in plain language. If the total value of your foreign bank accounts exceeds $10,000 at any point during the year, you may need to file an FBAR. That report is filed electronically with FinCEN, not the IRS, and the deadline is April 15th with an automatic extension to October 15th. The report requires information such as the institution name, the country, the account number, and the highest value the account reached during the year. And this is important. The threshold applies to the total combined value of all accounts, not each one individually. So 3 accounts with $4,000 each would still cross the threshold. Now let's talk about who this affects, because this is where many viewers realize they fall into one of these categories. Seniors who worked abroad at any point in their lives, retirees receiving pensions from another country, people who keep small accounts overseas to help family or pay expenses when visiting, U.S. citizens who moved abroad after retirement, immigrants who maintain accounts in their country of origin, naturalized citizens who assume reporting rules changed after citizenship. All of these situations can trigger reporting obligations depending on balances and circumstances. And there is another important principle that surprises people. The United States taxes worldwide income for citizens and residents. That means income earned abroad can still be taxable or reportable, even if taxes were paid in another country. Although tax treaties and credits often prevent double taxation, but treaties do not eliminate reporting requirements. That distinction matters. Now, I want to talk about enforcement because this is where fear often replaces clarity. Over the years, financial institutions worldwide have increased reporting cooperation under laws such as the Foreign Account Tax Compliance Act, often called FATCA. This law requires many foreign banks to report accounts held by U.S. persons. That is one reason compliance awareness has increased. This does not mean everyone is being targeted. It means reporting systems are more connected than they were 20 years ago. And that is why people are hearing about this topic more often now. Let me share a realistic scenario. A widowed retiree who lived in Canada years ago continues receiving a small pension from there. She reports the income but never realized the pension account itself might also need to be reported under certain circumstances. Years later, while organizing paperwork, she discovers the requirement. Correcting the situation is possible, but it takes time and professional help. This is not about punishment. It is about awareness. Now let's talk about the mistakes that cause the most problems. The first mistake is assuming small accounts do not matter. The second mistake is assuming savings accounts do not count if they produce little income. The third mistake is believing citizenship status changes reporting obligations automatically. The fourth mistake is believing tax treaties remove reporting requirements. The fifth mistake is waiting until an official letter arrives before taking action. Now stay with me because this is where control comes back, and this is the checklist I promised. When this appears on screen, pause the video and screenshot it. That helps you review it calmly later, and it also helps more seniors see information like this. First, make a simple inventory of any foreign accounts, pensions, or financial interests you have, even small ones. This includes savings accounts, checking accounts, retirement or pension accounts, and investment accounts. Many seniors overlook dormant accounts opened decades ago or small balances kept for family visits. Write down the institution name, country, and approximate balances. Having a clear list removes guesswork and helps you understand your reporting responsibilities. Second, determine whether the combined value of accounts exceeded $10,000 at any point during the year. This threshold applies to the total of all foreign accounts combined, not each account individually. Even if the balance exceeded that level for only one day, reporting requirements may apply. Reviewing statements or online histories helps confirm this accurately. Third, review whether additional reporting forms such as Form 8938 may apply depending on your financial situation and filing status. Thresholds vary based on whether you file single or jointly and whether you live in the United States or abroad. Many taxpayers assume one form covers everything, but different forms serve different purposes. Fourth, ensure foreign income, including pensions or benefits, is reported correctly when required. Even if foreign taxes were already paid, reporting may still be necessary. Tax treaties often prevent double taxation, but they do not eliminate disclosure obligations. Fifth, if you discover past omissions, act early. There are procedures designed to help taxpayers correct non-willful mistakes, and resolving issues voluntarily is generally less stressful and less costly than responding after an audit notice. Sixth, consider consulting a qualified tax professional if your situation involves multiple accounts, pensions, or countries. International tax rules are complex, and a professional can help ensure filings are accurate and complete, reducing the risk of penalties or delays. Seventh, organize and keep records for at least 6 years, including statements, tax returns, and filing confirmations. Clear records make it much easier to answer questions, verify filings, and resolve issues quickly if a review ever occurs. And now I will also provide the names and contact information of institutions where you can get reliable information so you are not left searching in a moment of stress. The world changed, banking changed, reporting changed, but no one sat seniors down and explained it step by step. That is why conversations like this matter, because knowledge removes fear. If this information is helpful, please take a moment to like this video and subscribe to the channel. It helps me continue creating clear explanations about the financial and legal issues many seniors are quietly coping with right now. If you know a friend, neighbor, or family member who has lived or worked abroad, or who may still have financial ties to another country, please share this video with them. One conversation can prevent years of confusion. And always remember this: our rights do not expire with age.